Welcome back to Yahoo Finance. I'm Jared Blickery, and let's go over some of the jobs numbers that we just saw released. Change in non-farm payrolls for the month of June was 187,000. Expected was 200,000, so a shortfall of about 13,000. Unemployment rate, that ticked down to 3.5%. And average hourly wages, as representing potential inflation, is up 4.4%. And that was a surprise. Street only expected 4.2%. Well, joining us now is Julia Pollak, the ZipRecruiter chief economist, and we want to stick with the jobs report. What's your first blush impression of these numbers?
The Goldilocks report shows a graceful descent in the labor market to a sustainable cruising altitude. Around 150 to 200,000 jobs added each month is sort of a perfect number that will continue to keep unemployment low and keep job seekers and even recently laid off workers finding new opportunities.
Julia, it's funny, in your note, looking ahead to the report, you called it pleasantly uneventful, likely to be pleasantly uneventful, which I enjoyed that phraseology. And it looks like mission accomplished. Indeed, it was sort of pleasantly uneventful, or Goldilocks, to put it another way. What kinds of trends are you all seeing in ZipRecruiter? I mean, one of the things that stood out to me in particular was the decline in temporary workers, which tends to be a forward-looking signal. So while we're seeing this graceful decline, is it going to remain graceful?
So usually the decline in temporary help workers is a signal of a downturn, but that number has been declining for months now, and it's been declining from an exceptionally, unusually high level. What happened during the pandemic was that companies saw demand recover much faster than staffing, and so they had to rely unusually much on temporary help workers. Now they are increasing the ranks of their own staff. They're hiring again. They're actually seeing engagement on job postings rise. They're finding it a little bit easier to get candidates and to get higher quality candidates. And that's allowing them to move away from using contract labor and to focusing on their in-house staff.
Julia, we were talking earlier about how Apple said on its earnings call last night that they have now started to slow hiring, and that really left an impression on me. You don't normally hear that from a company of importance like an Apple. Does that signal anything to you on where the jobs market is headed later this year?
So Apple is a notoriously frugal and conservative tech giant. They did not expand headcount 50% like other tech companies during the pandemic, and they're very focused on efficiency. I think that earnings report contrasted with Amazon's, which saw huge growth across pretty much all metrics and suggested that the U.S. consumer is alive and well. Part of what's happening in tech is a normalization. That industry so boomed during the pandemic when everyone was stuck at home on their computers and their Nintendos and their phones. And now, people brought forward purchases of new devices, and they don't need quite as many now.
And we also saw a lot of strength in the labor market that just gave people the option to jump ship if they want. So I want to talk to you about the JOLTS report, which came out the other day. And as you're writing, and I like that, the U.S. labor market continued its graceful return to more normal turnover patterns, yet the numbers they remain elevated here in terms of benefits toward job seekers. So why don't you just give us a breakdown of what you're seeing, please?
The labor market is still tilted towards job seekers. The quits rate is now 2.4%, down from a high of 3%, but still above the pre-pandemic rate of 2.3%. And of course, not the whole economy is slowing down at once. There are parts of the labor market where workers have retained their leverage and where turnover is still incredibly high, like healthcare and manufacturing. All of those in-person jobs and low-wage jobs that have been particularly affected by staffing shortages continue to see very strong wage growth pressure, and employers are still struggling to find candidates there, particularly candidates with sort of 5 to 10 years or 10 to 15 years of experience and with specific credentials.
So, Julia, are we still seeing a lot of, it sounds like yes, are we still seeing a lot of so-called job hoarding, if you will, where employers are reluctant to cut jobs because they think it will be hard to rehire, when things pick up again?
So I don't think firms are mostly hanging on to idle workers. If you go around the country, I think most people feel very clearly that the nation is understaffed. Go to an airport and there will be multiple, TSA lines, but only two in operation. There'll be multiple check-in counters, but only one or two with humans behind them. And that's a testament to the fact that business activity has recovered to its pre-pandemic, not just pre-pandemic level, but pre-pandemic trend in many cases, in some places even better. And staffing actually still has some catching up to do in many, many industries. That said, yes, employers realized during the pandemic how hard it can be to replace workers, and they are reluctant to let them go, especially with these tailwinds buoying the economy, like real wage growth now turning positive, like consumer confidence and CEO confidence rebounding, and the stock market rally that's also boosting companies' strategic opportunities and having a wealth effect in the economy.
When will the Fed's rate hikes start to be reflected in the jobs report? Because here's another report, 187,000, didn't beat estimates, but still very solid, and I would argue maybe doesn't reflect the steady approach to raising interest rates by the Fed.
So what you see in these reports is sort of a tale of two economies. One part of the economy is already feeling restrictive monetary policy and has been for months, and that is areas like tech and mining and manufacturing. Job growth in those three industries has been weak or negative in reports for several months now, and will be likely until interest rates actually start falling.
Julia, thank you so much for your perspective this morning as we look at the aftermath of the jobs report. Julia Pollak, ZipRecruiter Chief Economist.
Thanks so much.
Thank you.